What's up, guys? Welcome to Bullish Bets. On this channel, we cover all things related to stocks and investing. This video, we're going to do a deep dive on Upstart. Keep in mind that we're not financial advisors and this video is for entertainment purposes only. Make sure you do your own research before making any investment decisions. So Upstart. Upstart's been going crazy for the past week or so. We made a video last week stating why Upstart had the potential to grow even with a $110 price point. It's now $164.90 as of closing of March 22nd, 2021. To be fully honest, we still think there's going to be some volatility. It's going to drop a little more before it goes up. But overall, we are very bullish in the long term for this business. It's a disruptive business in a conservative market, but it's moving the needle. It's going to change, and when it does, it's going to be explosive. So this video is more about a deep dive on Upstart and what it does and why it's disruptive. So it's going to be broken down into 5 parts. First is how they're different. And second, how they're cornering the credit industry. Third, how they benefit consumers. Fourth, how they benefit institutions and enterprises. And lastly, how they plan on growing and how they will grow. So let's jump into it. So let's start with how they're different. Upstart, what they did is they built the company to improve the access to credit. They're a fee-based business. How they make their money is they don't take any credit risk, but they're essentially underwriters for banks, and they're also originators for some also. What they're doing is they charge a fee to banks for finding them credit-worthy consumers, and they get paid for this. And on top of that, what they did is they spent 8 years perfecting their AI lending. They gathered data and they improved the AI model that continually grows. As of right now, the AI model is not perfected and won't be perfected because it's going to gather more data and they're going to constantly make improvements. And what's great about this is 71% of the loans are instantly approved and automated. Based off the information they have and gather, it can be automated in less than 24 hours. It's amazing because it's a software business and it has a fixed cost. The variable cost is very low. Once they continue to grow their AI models and get more customers and get more enterprise to use their services, it's only going to improve, and they're going to make a lot of money based off the bottom line. They don't need to hire underwriters. They don't need to hire loan originators. It's a software business that is replacing a lot of jobs, essentially, in terms of paying people $100,000 just to underwrite loans. And on top of that, they could do it a lot faster. So let's jump into how they're going to dominate the market. Like I mentioned, they spent years building their AI technology. It requires more data for it to be more informed. So when new startups try to implement this AI model, they're not going to do as well, or they're not going to get the amount of default rates that Upstart can promise, because they don't have the same amount of data and the AI is not as complex yet. Bigger, and even if bigger banks try to join this market and create their own AI, they're still 8 years behind. They're still going to need to improve. Although they can gather data, it's going to be a huge cost just for them to get the AI model running. And even when they start improving, Upstart's going to be another 8 years ahead, and it's going to be even better in terms of analyzing risks and credit risks for financial institutions. So like many software companies like Google, Facebook, Instagram, you don't want to use the second best software company when there's no geographical limitations. Upstart is on the software phase of changing a very conservative market. And since they're first, they're going to dominate it and control a lot of the market share. On top of that, we talk about competitors like Lending Tree, Lending Club, etc. They can't compete with Upstart, even though they're fintech, because they don't offer a good underwriting system with AI technology that lowers risk for financial institutions. If they can't lower risk for financial institutions, it means they can't offer better loans to consumers. So essentially, these Lending Tree, Lending Club, Cabbage, and all those institutions are going to have to make riskier bets off of credit scores, FICO scores that Upstart doesn't deal with, because it's not as accurate in terms of determining credit risk. On top of that, like I mentioned, why would bank, use the second best product? Lending Tree is gonna have less consumers because they can't offer better rates, and this is just gonna lead to Upstart gobbling up a large market share just because the product alone is better. It's kind of like the transportation market. Let's say Lending Tree and Lending Club are like horses, carriages and stuff like that. Even though they can transport people from point A to point B, they have a limit of what they can do depending on the speed of the horse. Upstart is creating an engine for a vehicle that can essentially drive itself and constantly improve. It's not limited based off what the lenders are able to do, because they can constantly reduce the risk of the lenders. So let's jump into how they benefit consumers. So 4 in 5 Americans have never defaulted on a credit product, yet less than half have access to prime credit. Now, according to Upstart's website, 80% of Americans never defaulted on a credit product, and only 48% get a loan. This means that a lot of the market isn't accounted for. A lot of consumers aren't able to get loans at a good rate because the traditional FICO score is outdated, and it doesn't account for a lot of the variables that makes the person a good credit. And since that's the case, institutions are going to have to charge a higher interest rate just so they can balance off the potential credit risk of the lack of accuracy from FICO scores. So imagine that you're a college graduate 5 years ago. You did not need to take out any loans for college because you received the scholarship. You went out to get a good job paying $80,000. Since you were responsible, you wanted to use cash and save money instead of rely on credit. So you never build a credit score up. 5 years later, you get paid nearly $100,000, but you want to buy a car. In this scenario, what happens since you don't have any credit history? It's one, you don't get approved for a loan, or you have to pay a 15% interest rate. Or the last option is you buy the car 100% cash in full. And imagine a scenario B. A person comes out of college, has a lot of debt, and let's say for comparison's sakes, this person makes $80,000, and within 5 years they get paid $100,000. But this person also spends a lot of money on credit cards, and they like to leverage a lot of debt. Well, the credit system is going to benefit this person more in terms of the fact that they're going to have a credit history, and they're going to be able to get a 3% or 4% loan on a car, while person A in this scenario doesn't necessarily mean they're a higher credit risk. They won't get a loan and they won't be able to buy a car. What happens is a lot of people in the market coming out of college aren't able to get loans because they don't have a good credit score. Either they don't have credit history, or they messed up when they were young. The FICO score is very unforgiving. If you default on loan once, doesn't matter what job you have, you're going to have a low FICO score. You're going to have to pay a higher interest, even though you might have learned from your mistakes and your recent transactions are all cash and you're paying your rent on time and everything. The FICO score is going to take years to change. It's a 5-7 year system. So within that 5-7 year system, you're going to be deemed as a bad credit when it might not be true at that point. There are a lot of variables in place that Upstart AI system accounts for. So you can borrow money to, buy a car, start a business, whatever you need the money for. Just because you don't have a history of using a FICO score, which in itself is an inefficient way of deeming if someone's a credit worthy in terms of risk profile. It limits the amount of people in the market that can borrow money, which in itself hurts the consumers because they're going to have to pay a higher interest rate and so forth. On top, what also makes Upstart great, like I mentioned before, it's 70% automated. So it's fast. It's not going to take 2 days or so for you to get a loan, your loan approved. Since it's 70% automated, once you fill out your information, it's pretty much instantaneous. It's like faster than next day funding. So let's talk about how Upstart benefits enterprises and financial institutions. So they have competitive digital lending experience. So they provide regional banks, local banks, and credit unions with, a cost-effective way to compete with, technology budgets of, Chase, Bank of America, Wells Fargo, and so forth. On top of that, they're able to expand the customer base and lend to people who traditionally aren't deemed as creditworthy. Like I mentioned before, 30% of Americans who never defaulted on a credit don't have access to prime credit. So Upstart allows these smaller regional banks to target these customers. On top of that, the loss rate of Upstart underwritten loans is 75% less compared to larger banks. So the default rate allows regional institutions to be more comfortable lending out money to a larger pool of people. Next is they offer new product offerings. Personal loans is one of the fastest growing segment in the credit, and their platform allows banks to provide their customers with a variety of different loans based off what the banks are comfortable with. And on top of that, Upstart has a systematic response to events like COVID. They're 5 times more predictive compared to the traditional credit score during COVID-19. And what this all leads to is a better customer experience. With a better customer experience, smaller institutions are able to compete with these large institutions who don't approve many loans because they don't have to. They have a 79 NPS, which essentially means a metric for assessing customer loyalty for a company's brand, products, and services. 79 versus a 30 NPS score at top tier banks. So if smaller banks work with Upstart, they generally have a better customer experience, which in a sense will allow these smaller banks to compete, which is a great selling proposition for Upstart. They're essentially going to boom because their customers, which are enterprises, are going to grow with them. So let's talk about how they're going to grow and why they're going to grow. So initially when Upstart first started, they focused more on unsecured loans, which is a $92 billion industry. But based off the earnings report that I mentioned in our last video, they acquired Prodigy, which is the future of automotive retail. This is their plan to get into auto loan originations. The market is a 600. This is their plan to get into auto loan origination. The market is a $626 billion industry. That is around 6.5 times larger than the industry they're in now. And they currently have a great revenue stream. But if they get into the auto loan industry, they're going to grow exponentially. And that's not where they plan on stopping. What they plan on doing is they plan on offering more products. They're not planning on just stopping in auto loans. this is just one step for them. This acquisition, puts their foot in the door, but they're looking into getting into mortgages, more student loans, and point of sale loans. This allows them essentially to probably get into commercial loans and so forth. So the growth potential for Upstart is exponential because they have an AI lending platform that is constantly learning, constantly improving, and they have essentially cornered the market where they're ahead of everyone. Even if people try to catch up, they're still going to be 8 years ahead because they started early. Startups are going to have a hard time because they're not going to have the capital to do the same studies that Upstart has already done 8 years ago, who is already getting customers and improving the default rate risk that institutions want to see. And if larger institutions try to solve this issue, it's going to cost them a lot of time and money also. And what Upstart is targeting is the smaller regional banks and credit unions, which allows them to essentially grow exponentially with these institutions and build strong partnerships. And this gives a lot of room for Upstart growth. With their price jump to $164, they're currently have a market cap at around $12 billion. If they continue to grow in the unsecured personal loan market and they grow in the auto loan market, and future if they expand into the mortgages space, they're not only going to triple their market cap, but it's going to be exponential. They're going to be here for a while, and it's because they have a great product. Let me know what you guys think in the comments below. Do you think Upstart's going to change the whole lending industry? Or do you think the lending industry is too conservative and won't change? So that's it for this video. If you liked our content, please give us a thumbs up. We use this as feedback as to whether we're making content worth watching. Thank you again very much for watching, and stay tuned for the next one.